Okay, folks, welcome to Sunday Night Futures Live. We're going to take a few minutes. We're going to go over the opening price action of the stock market futures. We're going to talk about headlines, and then we're going to talk about something that's near and dear to my heart, and I'll tease with that, and then we'll segue over into the Larry. Hi, Emilio. Hello, Nestor, Gary. Franklin, hello. We'll segue over and into some stock chart requests. I have a whole bunch to go over from members, a lot. So hopefully I can take some from the audience. If we have the time, I'm certainly going to do it. Thank you very much for that. Jedi is referencing as a matter of fact, I have it up here. I thought I had it up here. A webinar I did it was actually pre-recorded back on the 26th, I believe, of August. And if you want to take a look at this later on, that's fine. But it was a really good show, a really good production that TrendSpider put on today. It was about 5 hours worth of, not interviews, but traders giving their insights on how they use TrendSpider, their style, whatnot. So it was really good, a really good time. And I look forward to doing it again. I think this is like my 5th or 6th appearance on their webinars. So it was great to be. Hey, Eric, hello. It was great to be with them. And I thank them for, if they're watching, thanks for the invite. Okay. Which do I want to go to first? Let's take a quick peek at the futures market, which is now open. I have not taken a look at it yet. We have a gap up on the E-minis, S&P 500 E-minis, up just shy of a half percentage point. Take note of RSI. Is this a 4? No, this is a 5-minute chart. What am I doing? I don't use 5-minute charts. Maybe at the close to watch, but otherwise I don't use 5-minute charts. Let's clean this all up. Let's start fresh. Okay. Let's go from what has happened to what we need to see happen to have us turn bullish on this market. And frankly, the more analysis I do of what's going on in Washington and socially, geopolitically, I am not getting the warm and fuzzies about this market. I've been saying that I'm expecting a rally into the election. What hurt that that thesis, that theory, was that they couldn't get a deal in Washington. They couldn't come to a deal to help out those that are out of jobs and small business owners. And I don't think Pelosi's going to give it to the president. So we'll see whether or not the Fed can step in and make this market continue higher into the election. Frankly, it's got to happen. But after the election, I don't think that either party is going to accept the results of the election, and that we're going to see volatility like we have never seen it before. And I'm worried about big-time funds front-running that event like we're setting up for right now. So it's a concern that we may not get the big rally that we had hoped for. I was expecting a rally in the Dow Jones Industrial Average, possibly taking out all-time highs. But I'm becoming a bit nervous. We'll see what this week brings. Critical week. The Russell 2000 up over a half percentage point. We have a breakout here, assuming that we close above this resistance level. Now, keep in mind that the futures just opened 5 minutes ago, so they're really going to need to settle down. If I have time, we'll circle back prior to logging off and see where we're settling out. And that'll give us a better indication of what might happen tomorrow morning. I think that if we're going to see a market rally, the Federal Reserve is going to have to prime the pump 2 a.m. like they were doing several weeks ago. Prime the pump 2 a.m. in the morning, 3 a.m. in the morning. Get the E-minis ripping, roaring higher. And get everybody excited for the next rally up. So we'll watch and see whether or not the Russell 2000 can hold the support level in yellow. If it fails, expect a retracement back down to this lower band of support. If that fails, new rounds of selling. Expect the computers to kick in, new rounds of selling. Let's take a look at the NASDAQ futures. I should have had this ready. I apologize. Okay. So the NASDAQ futures are up, just like the E-minis and the Russell, up over a 0.5 percentage point. No breakout yet. We need to hold this low. $10,943. Let's go to the dollar. The dollar is down, but just barely. The dollar so far this month, we have thus far this month, it's only halfway over, has recaptured the support level. It could easily give it up. But on a monthly basis, looking good. Weekly basis, I don't know. I'm a bit torn on it. I think that what is helping fuel the dollar is the fact that they couldn't pass the stimulus bill last week, and that you actually saw, I'm going to go to chart of this in a moment, since June, you've seen the Fed's balance sheet decline, not build, believe it or not. It's by a token amount, by 150 billion, thereabouts, give or take a billion. But, and add to that, Brexit is causing more turmoil and making the dollar stronger as the euro weakens. So the dollar's looking okay here despite the fact that we're down. Let's check out gold. Do we have a divergence or is it weak? It's flat. We attempted multiple times last week to break out to no avail. But we did close up on the week with a dollar that was up as well. On gold anyway. The miners, not so much. VIX. All right, VIX is down as it should be. Lately, we've been seeing way too many correlations between the VIX being down while the S&P was down, both on Friday. Down. Again. Before that, they were both up. And that's a harbinger of bad news. Let's check out bond yields. Our bond prices. We are flat on the session. Yields flat, that means. Natural gas. Catching a bid, but still a horrible chart. Oil. Let's go to light sweet. Oil, we saw a build in crude last week. Not good. Energy, took it on the chin last week. We saw a good Friday on energy. We'll keep an eye on that for possible trade, but not a good week for energy. But we did begin buying ExxonMobil, nibble, 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 yielding over 9%. Is it safe? I don't know. That's a different story. Bitcoin. Bitcoin still holding 10,000, flat on the session. I think that we hold. CPI data came out last week, hotter than expected. I've done analysis on this on YouTube, showing that Bitcoin trades in correlation with the CPI. So if inflation continues to run hot, expect Bitcoin to move up higher. So we've had our retracement back down to 10,000. We expected it. Now it looks as though we are putting in higher lows. Get ready for the breakout. We broke out. This is a 4-hour chart. This last 4-hour bar. Now we're retesting the breakout point. Bitcoin's a buy right now. I need to take a look at home heating oil because I have to decide whether or not I'm going to arbitrage my buy this week and buy a little bit or buy a lot to front run a move in the price. So bear with me 1 second while I do some home economics. I don't see a rush just yet to go loading up the tank. Outside reversal bar. We'll see where this closes. All right. Enough home economics. Let's go to the comments. Franklin, yeah, it was everywhere. Yeah, well, that was pre-recorded. There was a lot of promotion behind that webinar. Gary, good evening to you. Nestor, hi Bob. Would like to know your thoughts on long-term inflation with oil? Yeah, I could talk about that. I think that at current, if the fact that they don't have a stimulus bill to put out, that means no more helicopter money, at least for right now. You have oil, which stockpiles rose last week. It's behaving very, very poorly, broke support. Nat gas looking poor. So I think that we could re-enter a period of deflation, very, very short term, until after the election. After the election, you're going to see more stimulus bills get passed, helicopter money through the roof, especially if Biden wins. Kamala Harris said that she wants to have $120,000 sent out each year in helicopter money to people making less than, I guess, $120,000. So socialism is here. It's at our doorstep. And honestly, it's even being pushed by the Republicans. Nobody's debating sending out more checks. And when was the last time you saw a federal government program ever get eliminated? So helicopter money is here. And I think in the short term, between now and the election, we may get a little bit of deflation. Longer term, inflation is coming. And I'm going to go to a chart of what real inflation probably looks like in a moment. In fact, let's go to it. Before I do that, I need to touch upon a topic. And I'm proud to be a part of it because one of our fellow members, Patrick, I don't think he's attending tonight. He's at a baseball game, Little League game. We have this gentleman. His nickname is JoJo. And his name is Matt JoJo Moore. He's a paraplegic. And Pat asked me, do me a favor. Can you reach out to him, speak to him, learn about him, and maybe ask the attendees this evening on Sunday Night Futures Live if they'd be willing to donate. A bit about JoJo. He was a teacher for 36 years, a rugby player. He was paralyzed at the age of 49 during rugby game. I spoke to him earlier this evening. A very nice man, and I took notes, and I put myself in his shoes, and we were talking about his outlook, and the two words I wrote down were optimistic or optimism. He's got a lot of it for a guy that's in a wheelchair and in need of tremendous amounts of medical care, in-house medical care, which is hugely expensive. Faith. He's also a minister. And he's a very, very optimistic. I think it's driven by his faith, belief in God. He's got 4 daughters, 8 grandkids all around the country. So if you're so inclined as to donate even a few dollars, I did so earlier today. That's me here. 128 people have so far donated, and I donated as well. So I put my money where my mouth is. So if you'd be so inclined to do so, I will drop this link into, it's in the description area below for those watching this on the replay. I shared that in the chat box. So whatever you can do to help the man out, it would be great. And I just am happy that I'm able to use this platform to help out another person in need. So whatever you can do would be great. Thank you. Okay. Moving on to inflation. And it's funny how Nestor brought this up. And I'm going to blow through this really quick. And actually, I want to go to this first. This is all the iterations of each time they've changed the CPI. And the last time that they changed how they calculate it is completely different than how they calculated it back here when you had stagflation the first time during the Jimmy Carter years. Now they've gone through not 1 iteration, not 2 iterations, but now 3. I'm not going to get into this all too much, but it is not the same formula as they calculated inflation back in 1979 during the stagflationary times. Now, the contrarian inflationist analysis is that, this is not what I wanted, is that while the Federal Reserve has inflation less than 2%, remember they changed their tune. They no longer want a target of 2% inflation. They want an average of 2% inflation. So everything's changed. But the numbers run by the consensus of contrarians, they have inflation running at 8%, which makes more sense to me. Granted, you're going to have pockets of deflation in the economy at any given time. But overall, inflation is on the rise. So the CPI, and note when they really diverged, and that was back here during the last iteration where you saw the consensus contrarians inflationary numbers rise, whereas the CPI data declined. So this myth that we have no inflation or it's too low is ridiculous. We've been saying this for a long time now. What's been validating our thesis on this? Look no further than the stock market itself. It's overvalued. Inflation is shown in the stock market. If we need more evidence of inflation, look no further than the tip market. Treasury inflation protected securities at all-time highs. I mean, it's crazy. Look at gold. Gold, sure, it's pulled back off of its highs, but we're still right at prior highs. So we've pulled back, we've broken out on gold in 2020. We've pulled back. Now we're doing a retest. I think that as we proceed into the election, you're going to see gold catch a bid like you've never seen it before. You're seeing China, They're no longer investing in U.S. Treasuries. They're selling U.S. Treasuries. What are they buying? Steel, which we own. They're buying industrial metals, gold, silver, whatever has intrinsic value, they're buying. They're not buying anything that has the risk that U.S. Treasuries do, the risk of inflation eating away at their investment. So they're buying items that will do well in an inflationary environment, which is exactly what we are doing here at the Contrarian Trader. If you go to that video on TrendSpider, I said during that webinar, while the market was going up, I said, expect a correction. We're going to have a correction soon. And sure enough, we've had it. The question is, will I be right and that we rally into the election? That's yet to be seen. And my confidence since then has been a little bit weakened, to be honest with you. With the events that have transpired in Washington, what's going on socially is very, very concerning. And the fact that the results of the election are probably going to be contested by both parties. I mean, you want to buy stocks at all-time highs? Not me. And lastly, I'm going to leave off with my typical tirade about how expensive the market is. And if you wonder whether or not it is overbought, we have not been this overbought ever in history. We have never been this far extended beyond the overvalued S&P 500 PE 20 greater 20 or greater measure, which is in red here. We've never been this extended. This is the dot-com bubble. For those that are too young to remember that bear market, that was 2 years of selling. Constant selling. So, folks, the point of the matter is that while we may get a few more weeks of the markets moving up higher, drifting up higher, and they may even spike the Dow Jones because you have a lot of heavy shorts in there, or the old tech stocks will get bid back up. You had the airlines up last week. They did fairly well. Maybe they'll rally those names, driving the stock market higher, squeezing the shorts. That's probably going to be the last rally, the last hurrah for this market for quite some time. So beware. Be very, very afraid. Here's the Fed's balance sheet. And you can see that back in early June, it was at $7,168,936,000,000. It's come down some. I said 150 billion earlier, more of 160 billion. So it's come down some. But given the fact that the Federal Reserve has no stimulus to support them, they're going to have to step in and again begin pumping up their balance sheet. So short term, to going back to Nestor's question about long-term inflation, I think it's coming. It's going to be horrible. Short term, expect a little bit of deflation, which is why I think that gold and the miners have been a little bit weak of late and the dollar a bit strong. Will AMD we'll take a look at that if I have time. I have a bunch to go over. Emilio, and congrats on that trade. Well, all right. Pre-drag, hello. Pre-drag. Good evening to you too, sir. Suresh, hello. Amerimigo. Corey, I think mask and closing bars equals effectiveness of lockdowns, even if it seems complete lockdown would be better. I think that the Swedes had it right. I think the president was right about hydroxychloroquine. I think that this is my own personal opinion, the biggest scam that has ever been perpetrated on the human race. I think it's real, the disease, but the reaction to it is just astonishingly poor. And I'll point the finger of blame at a certain swamp creature who had his mask off at a Washington Sentinels. I think it's Washington Sentinels baseball game. Hey, Pat. Welcome aboard. Thank you for that, Franklin. Yes, Frank, hit the like button, everybody, if you could. Thank you. I swear, if I didn't have a viewer remind me to smash the like button, I would be guaranteed to have the worst YouTuber of the year award. So thank you for that. Appreciate it. Thank you, RL. Okay, let's thanks, Pat. My pleasure, pal. Let's take a look. I just want to stick with this for a moment, because if you're saying, it seems as if he's trying to instill fear into us. You're right. You're absolutely right. This is the Buffett indicator. The Buffett indicator is what Warren Buffett uses to measure the overvalued nature of the stock market or the undervalued or fairly valued nature of the stock market. Why hasn't Warren Buffett been buying stocks aggressively of late, or even during the downturn, except the Barrick acquisition and Bank of America? It's because it's so expensive. We've never been this expensive using the Buffett indicator. This is the market capitalization using the Wilshire 5000 relative to the U.S. GDP. Extremely overvalued. So earnings weakening, probably going to get weaker. The Buffett indicator overvalued. Inflation is going to be increasing soon. So be very, very careful, folks. This election is going to be an absolute and utter nightmare. Congrats on that trade, Pat. RL, input or snow job? Oh, input on snow IPO. Sorry about that. I misread. I'm in a conspiracy theory frame of mind. Okay, so let's do this. Let's go to some stock chart requests. It's 6:28. I have a lot to go over. I want to take some from the audience as well. So I got to go to members first. And I'll stay on as long as I need to go over the members' requests. So members, if you're watching, have no fear. I will definitely get to you. So let's do this. First chart up. Oh, this segment of Sunday Night Futures Live is brought to you by TrendSpider. There's a link below, 35% off. If you're not using TrendSpider, as I mentioned earlier in the TrendSpider video, you're missing an arrow in your quiver. You have to have it. And trust me, they are gaining more and more subscribers each day than you could possibly imagine. So you have a lot of competition out there using this technology. And if you don't use it and you're relying simply on static charts, you're being left behind. You need to have this functionality at your disposal. It's so critical. Seasonality, at the click of a button. All you need to do is enter the symbol, click a button. It's right there. Scanners, right here. Strategy Chester, right here. It's all at your fingertips. So again, link below, 35% off. Take advantage of it. They have a 7-day free trial offer, and it's included with our silver and gold level memberships. Let's get to this CHEF. The Chef's Warehouse. Apparently, I've gone over this before because these are an automated trend line. These are manually drawn trend lines. All right, so let's go with monthly view first. Where have we been to identify where we might be going? So apparently, I must have gone over this a while ago, and I called this a bear flag setup. And apparently I was right, because we were flirting with an upper band of resistance getting rejected, but we were finding support at a lower band of support, yet that failed in July. Fast forward to August, a very good month, an outside reversal bar, very, very bullish. That led to the continuation move higher in September. So a lot has changed since I last went over this chart. Let's throw up some. It's only picking up this one trend line here. Let's drill down to a weekly chart. This becomes more interesting to me. All right, so we broke out here the week of August the 24th, and it's doing exactly what you want to see it do. It pulled back, did a retest the week of August the 31st. Last week, it rallied. It was rejected along with the rest of the market, but it closed up, which is great to see in a weak market. We closed above this volume shelf, not one, but two big ones. And I think that this stock is setting up very, very nicely. So we have two retests of a breakout point. Always nice to see. We're beginning to, well, no, we have broken out on Stokes. We have broken out on Stokes. RSI trending up nicely. So our macro view, where have we been to identify where we might be going, is looking very positive. Daily chart. Now this becomes a conversation with regard to, would we want to buy here, or is there a better place to enter from a risk-reward perspective? I wouldn't be a buyer here. Not quite yet. I would, however, create an alert why is it having a problem with my mouse here? There we go. I want to know if we touch, bounce. We'll give it a little bit of sensitivity. I need to make notes to myself because I go over so many of these. I want to keep this active for the week. Good to go. So, CHEF, the Chef's Warehouse, looking very, very good as we proceed into the new trading week and months for that matter. SFIX, Stitch Fix. Same process. Higher level view. Not much data here. We did put in a new monthly high, which is always good to see. Weekly view. All right. So the play here is pretty simple. You have a tug of war going on here, as noted by the volume by price bars. Do I find that an attractive area to go opening up a position? No. Let these guys duke it out. If the bulls win, great. I'll buy on the breakout above 29.25. So let's create our alert. We'll keep it active for the week. Daily chart. On the daily chart, I'm looking for a place to nibble, to scratch the itch, to get into the trade, not too heavy, but to get into the trade at a risk-reward point where allows me to enter a stop-loss point. This works. Immediately below. I want to know if we break through, touch, bounce. Actually, forget the bounce. I'm going to keep this. I'm going to select all three. 5 days. Let's see if it holds this support level. If it fails, I'm not interested until it manages to recapture the support level. Or if it pulls back down here, I'm not going to set an alert. But I want to see it hold the support level, then add more on a breakout. So that's the take on SFIX. I think it looks good. Higher lows and higher highs. What more could you ask for? I don't like RSI. RSI broke down. Broke trend. So just be careful. VIAC. That's right. Yep. This is another one. We've gone over this in the past. And it achieved our goal, and that was to fire off at this lower band of support and then fire off yet again on a breakout. I didn't execute the trade. It's good to see that we have a breakout this month. The month is not over yet. So let's drill down. We don't know whether or not it's going to close above this breakout point. Good week last week. Stokes are very extended on a weekly basis. I'm not seeing a great trade here. Daily chart. No. A little bit of topping action. If it pulls back to this 20-period moving average, it seems to like it in green. It's bounced off of it. It's too far extended away from the 20-period moving average. I would avoid right now. I think you're going to get a pullback on the shares. Longer term, though, it's improving. The macro view, the weekly charts, monthly charts are improving. Daily chart, a little bit extended for my taste. FMC. You can't buy the stock. You can't buy it because we're stuck at resistance, and that's on a monthly basis. You don't want to go buying a stock into resistance. I don't care if it's daily resistance, monthly resistance. The difference between the two is that the monthly resistance is far more formidable to get through than what is a daily resistance level. Usually. There are circumstances when it's not, and that you're told that by volume, by price. So Monthly resistance above. Weekly chart. Broke support. Broke this lower band of support. We had a bullish reversal bar last week, but many times what happens is that when you break a support level, in this case, we didn't break just one support level. We broke two. We had broken out back here the week of August the 3rd, then failed to hold it. Then we broke down below the lower band of support. What happens is that you have a lot of traders they're in denial. They think they're getting a bargain. They're not paying attention to the weekly charts. And what do? They bid it back up in anticipation of a recapture of support. Many times it doesn't happen. It's a bull trap. And sure enough, it just fades and fails. I wouldn't buy this stock right now. Daily chart. Yeah, there's no reason to until we recapture one or both of these support levels. Or if we pull back to the support level. I'm not going to create an alert because I'm not really that interested. In the trade. So wait for the breakout. You're way too close. Buying right now, you're buying into resistance. So just be careful. XLV, healthcare ETF. If you want to take a look at where inflation is, folks, this is it. So far this month, we have an outside reversal month, an extremely bearish candlestick. But the month is not over. So we want to keep an open mind. We don't want to draw conclusions, go shorting the XLV simply because it's almost the middle of the month. We have a bearish reversal, a bearish engulfing on a monthly chart. It's way too premature. Let's drill down, take a look at a weekly chart. But before I do that, take note of your RSI, lower highs, while we're making higher highs. No bueno. Weekly chart. Another breakout point failure. We had broken out here on August the 24th. I think I even had this during that week as a watch stock, but it couldn't break out. All right, so it did break out. It just couldn't hold the breakout. And they tried to pull it back to retest support. It failed. Breakout point failure. Then last week we broke down below the prior lower band of support. I would avoid right now, unless the daily chart is so sexy that I can't resist it. No, I could resist it. I would avoid right now. I think that this sector should do well in the future, but right now it's trading with the market very, very poorly. I would avoid it, but we will be revisiting it as a potential long. FNGU. NGU, that's a funky. Oh, FANG index. As expected, man. This wasn't going to end well, and it is not ending well. So it's too early to buy it, unless the daily chart could sway me some. Take a look at your Stokes. Breaking down, or threatening to break down, I should say. RSI has broken down. The best that could be said for this chart is that we rallied off the lows of the week. The 20-period moving average is historically a support level, a rising support level still. Daily chart. $151 is an interesting support level. to watch. Stokes are beginning to flatten out a bit, which is good to see. I think there's a trade to be had here. But I would wait until late in the day, that 3 p.m. hour Eastern Standard Time, that final hour of trade, before I pull the trigger. Because one thing that the past couple of weeks of selling is taught us or reaffirmed is that when you have your stochastics trading down below the 50 mark, rallies tend to fade. So while they're spiking up, the futures right now, it doesn't excite me. Show me how we're poised to close out the trading day tomorrow. Are we closing near the highs of the day on volume? That gets me excited. Tonight's futures, not so much. So our alert set here. Take note of the automated trend lines picking up that we have resistance immediately above. So what this implies is that we definitely, to get into this trade, need to get more room between where we closed on Friday and this resistance level, because this prior support level in blue is now going to act as resistance. So ideally, we get a retest of the 151 mark. Then you could open up a trade. I would stay small. I think it's so speculative right now. The air is coming out of the triple Q balloon, the FANG balloon. So be very, very careful. OXY. Thank God we stopped out of that one. Occidental. We knew it was going to go lower. $9.12 per share. $9.12 per share. That's what I want to know about Occidental. I'm going to keep the sensitivity pretty loose, because, not too loose, because we may get a higher low. So we want to calculate that in. OXY, monthly support, retest. We're going to keep this active for 2 weeks. I took a loss on this one, but at much higher prices than where we are right now. So nothing, there's nothing more that I love doing is getting stopped out, because nobody likes to take a loss. Nobody. But when it comes down to your price point, you get back in at a much lower price. Me, that's lollipops and pixie dust. I love it. Not breakthrough. Touch bounce. All right, so we're good to go here. Next 2 weeks, let's drill down further. See if there's any other compelling reason to get long now. And I'm not seeing it, really. Here's our alert that's set. We're very close to it. Let's see how we close out the week. There's no reason to go running in on Monday morning to buy this stock. Now, that being said, we had a good day on Friday. We rallied off the lows of the day, but I still, no reason to go getting long of the shares just yet. Ideally, down here a little bit further, scratch the itch. Then, as we begin to break out, then we add more aggressively. and we'll keep it active for 2 weeks. Just keep in mind that up here we have a ton of potential sellers, as noted by these volume bars. What is seasonality for Oxy? Do we have any more than 10 years? Bear with me, folks. Yeah, we have a lot more. Not a seasonally strong period of time. Even going into December. January, it looks as though December is the trough. January begins to pick up, and it's seasonally strong through May, as noted here. So that's 39 years worth of data. Also, we want to take a look at catalysts. I don't care if we got to buy and what MKM Partners upgraded it for. I could care what they have to say. The value that this brings to me is that look at all of these hold and sells on Oxy. What that represents to me as a contrarian are potential positive headlines. Because what are they? Maybe they'll reiterate a sell, but at this price, who cares anymore? What we're hoping for, where we to get long, was from hold to buy. I can't go over the rideshare stocks. I have a conflict of interest, so I really apologize for that. But I want to be transparent. I have a conflict of interest, so my apologies about that. And no, I'm not a driver. So, great tool. So this to me, all these holds and sell, that's gold. It's all gold. That means to me that's potential positive headlines in the future where I along. Okay. STRA. Strayer Education. You would think that this company would be doing well. I believe this is an online learning school. Maybe I'm wrong. Let's pull back. It's an interesting chart. The automated trend lines look real pretty. All right, so the Stokes are weak, very weak, which implies that the path of least resistance remains to the downside. Now, we did close right at the lows of a volume shelf, where, as you can see also, was support back here in 2017. So is there a trade to be had here? First off, I want to bring up seasonality. November is very favorable. October, it trades above 50. So there's no rush here from a seasonality perspective. We don't base all of our decisions on seasonality. It's just a little bit of information that helps guide us. Weekly chart. Bearish key reversal bar last week. They tried to rally it. It was rejected. They closed at the lows of the week, but right at support. Stokes on a weekly basis are flatlined. Daily chart. Here's what initially attracted me, and this is the value of the automated trend lines. So, bearish key reversal bar on Friday. Expect more selling tomorrow. When I would be interested in this stock is if we sold off hard, then reversed to close back above this support level, potentially as soon as tomorrow. But this is a short-term swing trade, folks, not an investment. Way too early. Why can't I set my alerts here? My mouse is giving me there we go. I think my battery's going on my mouse. Breakthrough. I want to know when we break through. STRA. And then what I would do, because that would only be an opening trade. So if I want to buy 100 shares, I'm going to put on 20, 25 shares. Then we watch for the Pimp Mac Daddy, which is the breakout above resistance. That would be nice. Open a position here, add on the breakout. That's the trade. It'll probably rally up to, stiff resistance is up at 99.82 per share. So not a bad trade. Okay, and for those folks just joining, if you could smash that like button, I'd really appreciate it. Thank you very much. Will, thank you. The only reason why I remembered it because I saw Will's message. Thank you, sir. Okay. That's the last of our requests. So let me go to the top of the list. Pat, did you have anything? All right, Pat, you added to your position the CCL. I'm going to go over CCL. Let's take the automated trend lines off. Go high level view. $18.17 stiff resistance. 16.87 solid support. If we close above 18.17, I'd be a buyer myself. Nice higher low here. What's missing is a higher high. Oh, whoa. We broke out. What's missing is a higher high. But we broke out on a weekly basis. I missed this. August the 31st. Pat, you old smart guy. We broke out the week of August the 31st, pulled back, did a retest. They attempted to rally it last week. It was rejected. So what I want to do here is buy the breakout. And there have to be a lot of shorts in this name. Now, the key here, folks, is that, remember, we broke out above this resistance level last week, but we didn't close there. The key is that we close above the, 1816? We close above that mark. Stokes higher lows, RSI higher lows. Good weekly chart. This resistance level is a tough one. I like it, but I need to wait for the breakout. Let's see. What symbols am I missing here? Surest, M. Macy's, God, it kills me. To think that those thugs destroyed the Macy's that was in Miracle on 34th Street. As much as I'd love to say buy the stock, you can't right now because, well, maybe we can. You know what? Let's pause. Let's take a pause. Let's draw some trend lines. That's not what I wanted to do. Again, that's not what I wanted to do. I'm starting to fade. This is what happens. End of the show. Okay. I want to know when we retest this lower band of support. Look at all the cells. I'm going to bring this up in a second. We'll keep this active for 10 days. I love Macy's. Take a look at the cells. There's not one single buy on Macy's. This is gold to me. This is gold. I'm so happy that there's not a buy. Seasonality. September is not a good month. Obviously, Macy's, Christmas season, it picks up. I want to drill down a little bit further on the time frame because let's go back to 2000. The advent of gift cards and their impact on the buying season after Christmas, and it's reflected here. November very strong, and look what happens in January. Yeah, you dip, but then you pop back up. February, March, people come in with those gift cards and they use them. So, still a rough sledding ahead of us here. Let's drill down on the chart, daily basis, a weekly basis. Sorry, weekly. Bearish key reversal on the month. On the week, sorry. Starting to fade, sorry. Breakthrough. I want to know when we break through. Weekly resistance. There has to be a huge number of shorts in this name. One thing here is interesting. On the weekly chart, Stokes are like flatlined and putting in a higher low. A little bit of a market signal, maybe. Maybe I'm just sentimental because I like Macy's and Miracle on 34th Street. Daily chart. Rough day on Friday. I wish I could say that we're going to have an update tomorrow. I doubt it. Maybe we will. Maybe we'll go to $100 tomorrow. But I don't think so. I think that we're probably going to pull back down here, retest that monthly support level. And that's a good thing. So, Macy's, I would hold off on right now. Longer term, interesting. Very interesting. Crowdsource. $7.05. I'm going to make this my last one. Not much data here. Not a good month. Topping action. It's not a sell, but a lot of sellers above. I want to take this off. This is an expired alert. Actually, it triggered last week. And I wouldn't buy it until it retested 119.23 daily chart. Yeah, I mean, there's no compelling reason here to go buying these shares. None whatsoever. Wait for support to get hit. Tight stop right below. And a really good place to put a stop loss, if you got it at 119, is right down below here. If you wanted to keep it loose, right below 116.22. Because if we close down below that level, then it's over for a while, because that's another support level. So that's it, folks. Please smash the like button. TrendSpider, 35% off discount code below. Free with silver and gold level memberships. Follow me, please, on YouTube, Twitter. It's at Contrarian Trade on Twitter. And everybody have a profitable trading week. Thanks for joining it. And please remember, help out JoJo. Great guy. There's a link in the video description area below. I'm popping the donation link in. I've already donated. The guy's faith-based, paralyzed from his shoulders down, needs a lot of intensive care. So please, if you can help contribute, that'd be really wonderful. Thank you very much for being here, and have a great night. Talk to you soon.